you, UUM, for inviting me for this session. So today's topic is transformation of green technology stocks today and tomorrow. Okay, so this topic, the minute I saw this topic, I was very excited because this is the theme of investing at this moment. Because for this year, it has been very chaotic. It's COVID and it's pandemic. We saw the stock market was having a very like a coaster ride. It went down from our Bursa Malaysia index went down from 1,600 point down to 1,200 point, and then now we are back up to 1,600 point. So we went through like a roller coaster. And if you invest in the US stock market, you see that the US stock even very drastic. They went from the peak in the beginning of the year, February, they had a historical high. Then in March, they dropped 35% for the US stock market. And within a month, the stock index recovered back to the original position. So you saw, and now it's another historical high. So this year has been a very wild move for the stock market. So I'm happy to be here to share with you about green technology stocks. And I hope that in today's session, right, we green tech stocks, and then I'll present the fundamental as well as a technical chart. So you see how I do analysis regarding the fundamental as well as the technical, and then you learn from the process. Okay, so a lot of things, the process is more important than the actual facts. Okay. All right. So this BlackRock's CEO, Larry Fink, he put out a message to all his clients, investors. So he said that understanding of how climate risk will impact both our physical world and the global system that finances economic growth. So if you were to think about it, the whole world, if let's say we are looking at the environmental, the greenhouse, our global temperature is increasing. The whole world will be facing with a lot of the problem, and the problem, you know, it will be like floods and the crops as in the harvest will be affected. And you know, this harvest concern about our food, our basic necessity, the food. And then if let's say we do not have a good harvest, it will jack up the price. Then we'll have inflation. Okay, so do you see how all this will link together? If you do not care for the environment, then your food crops will be affected, and that will cause inflation, and it will affect our economic growth. Okay, and so that's why a lot of the investors now, and especially the company, the corporate, they are looking at sustainability. They keep mentioning sustainability. You want to be sustainable in terms of social responsible, care for the community. You want to be sustainable in terms of the environment, okay, care for the environment. And also, they also look at the governance, okay. So in fact, that is called the ESG. But today we are focusing on the green technology, which is the environment. Okay, so my stocks here are all concerning about the green technology stocks, which is about solar energy and all those environmental friendly companies that engage in those environmental friendly activities. Okay. Okay. So continue with the letter. It says that as a fiduciary, our responsibility is to help clients navigate this transition. Our investment convictions can provide better risk-adjusted returns to investors. And with the impact of sustainability on investment returns increasing, okay? Because you care for the sustainable because it's for the long term, then your investment return will increase. Okay, so you have to think long term. You cannot think too short term. We believe that sustainable investing is the strongest. So BlackRock has said that it's the largest fund house in the world. It says that they built the portfolio, investment portfolio, that with the core principle of sustainability. Okay, so they take care of the society, they take care of the environment, they also look into the corporate government governance. So BlackRock announced a number of initiatives to place sustainability at the center of our investment approach, including making sustainability integral to portfolio construction and risk management. Okay, and they exiting means they get out investment. They exit those investment that present a high sustainability related risk. So if they think that this one is like a thermal coal producing company, they will not invest in it. So you can imagine those oil and gas most likely will not be in the portfolio of the fund manager because it's involved in the exploration. It's non-renewable. So and strengthening our commitment to sustainability and transparency in our investment stewardship activities. So started from BlackRock, the rest of the fund manager will also behave like this. So sooner or later, you see that because the stock market is driven by what? Number one, driven by fundamental. Number two, driven by the demand and supply, which is the price action. So this demand and supply is simply people are optimistic, then they buy. More demand driven, the price go up. And then if people are pessimistic, then the price will sell down and then the price will go down. So it's driven by the market and also driven by the fundamental. Okay, these two. So if let's say you are looking at all these fund managers, they are all looking at towards the sustainability theme stocks, okay, the investing theme. So in investing, we look into the team, okay, the team of investing. So like right now, if let's say you were to ask me, what is a theme? The theme will be the technology. The theme will be renewable resources. The theme will be the electric car, EV, and solar energy, and dry cell battery. So all these companies that involve in producing these most likely will do well at this moment. And if you to ask me this question, maybe in March or maybe May, that was during the midst of the COVID. If you to ask me during that time, I would say that the healthcare stocks was the back then, okay, a few months ago. Because as you can see, when you are moving when you're moving from one time period to another time period, because of the investment environment change, the theme of investment will be changing as well. So if you are investors, you are able to catch the right theme, okay, you are able to catch the right theme, then your investment portfolio will most likely be doing very well. Okay, so for example, if let's say you invested in the glove stocks in March to May, you make some money. In fact, you make a lot of money, okay? You make a lot of money and then you sold it because you saw that the banking stocks was very, very badly beaten. So you sold it and then you switch to the banking stock. Then you are also doing very well because in November, all the banking stock was reached a bottom, a minimum. And then now the banking stock increased by about 10-20% already, from 7 to 8 something, the Maybank. So you can see that the team, once the team changes, right, if you're able to catch the right team, then your portfolio investment will grow. Okay, and if let's say you still hold on to the glove stock at this moment, you see that your portfolio is very bad, okay, rather badly beaten. Not that the glove stocks is not fundamentally sound. In fact, these glove stocks are very good fundamentals. You can see that P ratio was very low, and then the earnings is bigger, larger than the big banks in Malaysia, and yet their price is being beaten down. And that's because they are out of favor at this moment. It's not in the right theme now. They are not in the right theme, although we are still in the COVID. But if I were to ask you, how fearful are you with the COVID? Well, you'll say that, okay, with the scale of 1 to 10, In March, I feel that my fear in COVID is 10 out of 10, the scale. But now if you to ask me, how fearful are you towards COVID? You probably say, okay, well, it's not that deadly. Maybe it's about anymore. Do you see what I mean? So that means the people's sentiment will change. And then that is changing in the environment. So if you are able to catch that sentiments in the investing environment, then you are very successful in your investing journey. Okay, I can see that you will be very, very successful. So you must train yourself to be able to be very receptive. It's like an antenna. You grow an antenna in your head, and then you try to sense all the information. Okay. Okay. So renewable energy. So what is green? What is green renewable energy? So renewable energy is useful energy that is collected from renewable resources, which are naturally replenished on a human timescale, including carbon neutral sources like sunlight, wind, rain, tides, waves, and geothermal heat. So in Malaysia, we do not have wind. I mean, as compared to other countries, we do not have this kind of energy produced from the wind. Maybe some part of the state we have, but not as large scale, okay, as overseas. But what we have is plenty of sunlight, the solar energy. That's what, because we are at the equator, our local sunlight in Malaysia. So solar energy is our strength in Malaysia. Okay, we are blessed with this kind of a environment, and maybe the river, the water, hydro. Okay, so I will introduce more as I go on. So these are the renewable resources. Okay, that means sunlight is forever. It's like it cannot be depleted one day. Okay, so it's forever. The wind, the rain, all these are renewable. What is non-renewable will be those crude oil. Okay, that you dig from the ground, and then you explore from the ground, and then you extract, and then and all those fossil fuel and all these things, and when you took out, that means it cannot be replenished. Okay, it'll be the supply will be getting lesser and lesser. So can you imagine if, let's say, we do not think about all these renewable alternatives resources that provide energy to move the engine, and then to move all these electrical appliances. If we do not have all those alternatives, right, then one day the whole world will be will have extracted all the crude oil, and then you will not have all the coal and the fossil fuel and all these things. It'll be depleted one day. So that's why they need to go search for the renewable resources. And once these renewable resources are in big scale of production, you can see that those oil producing countries, their revenue will be greatly affected. And unfortunately, Malaysia, although we have a lot of resources, but our oil production is one of our important source of revenue. Okay, so that will be affected from oil. Okay, but anyway, that's why we need to turn to solar energy. So currently popular green energy in Malaysia are the solar, the biogas, the mini hydro, and the hydro. Okay, so let me go into detail. So before I go to that, the government authorities and policies responsible for overseeing the green energy in Malaysia. Okay, so we have the SEDA, which is Sustainable Energy Development Authority. And then we also have the Suruhanjaya Tenaga ST for large-scale solar. Okay, so these are the government authorities that are responsible to oversee the green energy in Malaysia. That means we are a big contributor to the environment. Okay, so that is very important. And not many countries can afford to do it. Only countries with full of sunlight like us, we are blessed with this kind of advantage. national renewable. National renewable energy policy. So these are the policies that we have. Okay, so by Malaysia, we also signed an agreement with the Paris agreement for the environmental agreement. We say that by 2030, right, we have to reduce our carbon emission by 20%. Okay, so that's a pledge to save the world, or means to save the green, I mean the environment. Okay, so we actually signed a pledge to actually say that we need to reduce the carbon emission. So hopefully, by having all these government initiative, we can bring down the carbon. Okay, so all these are the government initiative. And we also have an act, the act to provide for the establishment and implementation of a special tariff system to catalyze the generation of new renewable energy and to provide for related matters. So all these are the government effort to encourage the consumption and also the production of sustainable energy. Okay, how does green energy work? Okay, so here is a video, but I'm afraid if I go to play the video, right, then my screen will be blurred again. So maybe I just explain to you the video. Okay, so the video is actually a 1 minute video. It's about in Malaysia how we use this solar energy to earn money and to save money. Okay, so it's very interesting, this video. It says that if you just to install the solar panel, okay, every one of us, for example, if you are living in a landed property, every one of us will have a rooftop. Okay, and on your rooftop you can actually have the solar panel installed on your rooftop. And when you have that, you can the solar panel, right, will generate the electricity from the sunlight. Okay, because the sunlight will give you the, they call it the photo PV, photo, there's a term for it, voltaic or something like that. It will generate the electricity. Okay, so you will use maybe half of your household consumption of the electricity is supplied by the solar, okay, solar energy, and then the other half of it will be by the TNB. Okay, so if let's say your solar panel is so effective, right, it generates so much of electricity, and the extra electricity that generated from your rooftop, you can even sell to the TNB and you can get money back. Okay, so in fact, this thing happened, started in 2018. But before that, they started. But for this, with the proper scheme that run this scheme, right, is with this NEM in Malaysia and started in 2018. And it's getting more and more popular, although it's not as popular as, you know, it's just started 2 years, but then it will be getting very, very popular. So in the end, we will see a lot of the rooftop in Malaysia will have this solar panel. And then all of us will save your electricity bill. And you can save at least half of your electricity bill. Okay, then you can have all the aircon because it's all by solar energy. Okay. So this solar energy NEP, right, NEM, it says that it reduces your monthly electricity bill with rooftop solar PV. Okay, so install. And some of the stocks that I'm going to mention, right, later on will be involving in the manufacturing of this solar panel, that install the solar panel on the rooftop for commercial, for residential, for industrial. Okay, some of the stocks that I mentioned later. So we can take note of those stocks. But you have to take note whether the technically chart, whether it is overbought or oversold. Okay, some of the stock in fact has gone up quite a bit. Okay, so solar energy LSS. So this is how it works. I will not go into too detail because it's too technical. So basically it's a sunlight, and then you have the solar panel, and then it will produce electricity by absorbing the sunlight, and then they can transform the sunlight into energy. So you can supply to the whole household. And if it's industrial, it will be the whole factory. Okay, so it's very powerful. You can save a lot of money. If let's say you're looking at a huge factory, you can save a lot of money. But one thing about this is that the position of the rooftop, it cannot be too low. Okay, it has to be high. So for those housing area whereby they are up on a higher level, because of the landscaping, right? They are up on a higher level. They are able to have more sunlight than the lower level ground. Okay. So these are all the positioning of the house, and then so that you can get the most sunlight from your house. So that is solar energy. So next I'm going to talk about the biogas. Okay, biogas is actually production of electricity from palm oil meal effluent, POME. So what it means is that palm oil plantation, okay, you know, palm oil, we get the fruits only, right, for the palm oil. But do you know that the waste, a lot of the palm oil waste, right, you can actually transform, okay, chemical transform into biogas, and then it become renewable because it's recycling. You are using transforming the waste of the palm oil product into an energy source, which is called the biogas. Just imagine, in the past, when you produce the palm oil, right, you refine and then you produce, and you got all the waste. Okay, all the waste you just throw away, or you bury it, or whatever, you burn it. But now with this technology, you can actually transform the waste into biogas, and this biogas can produce electricity. So electricity produced, injected into the national grid to be consumed. Okay, so this is biogas. So we do have a few companies involved in this as well. Okay, next, that one, just now we have talked about the solar energy, we have talked about the waste of the palm oil. Next, we're going to talk about water, using the water to generate electricity. Okay, we have the mini hydro here, whereby it's by river. It's a smaller scale, it's by river, and then it will generate the electricity. Okay, then we have the hydro. It's called hydroelectric power generation. Now this one is a huge, large scale of power generation. Okay. If you do not use your mic, please mute. Okay. Then this involves a huge construction, and in terms of the power that generate, right, is it can generate more power because of the more water is involved. So you can generate more water, more power than the previous one. Just now it was just a mini hydro, just some small river. This one is large scale. Okay. Okay, next. Okay, up to here. If you have any questions, remember to jot down, okay, to write down on a piece of paper, and then at the end, you can ask me during the Q&A questions. Okay, so now in the next part here, and then you look at what these companies are doing, and then what are their fundamentals, and then what is the technical chart is showing. Okay, so I will look into these two, fundamental and technical. So this is always what I want. But before I go into that, I just want to say that before you go for your investment, right, you must have a clear time frame. What do you mean by clear time frame? So before you invest, you have to have an investment plan. And then at least if you do not have an investment plan, at least you must have a time frame. So you say that, okay, my investment now for this particular stock is for long term. Okay, so if your investment for this particular stock is for long term, then I would suggest 80% fundamental and 20% technical. Okay, 80% fundamental and then 20% technical. And the 20% technical is just for you to time the entry and the exit. You already know what you want to buy already. By looking at the fundamental, you know that this is a good fundamental stock. You already know. It's just that whether is it now to buy or later to buy. Then that part is a technical analysis part, and you can leave it to the TA. It's only 20%, not much. Because after all, it is for long term. So for long term, you focus mostly on the fundamental. However, if let's say you just want to, this particular stock, okay, you just want to go for short term. So if let's say it's for short-term speculative trading, then I would suggest 80% is technical analysis and 20% is fundamental. You don't have to look too much, or even 0% on fundamental is okay. You don't have to look at the fundamental at all. You focus on the technical. Okay, so that is technical analysis. So you must have a time frame. So for this particular sector, it's called the green tech industry or technology industry. So if you're looking at the tech sectors, right, there are some good stocks and there are some not so good quality stocks. So for those good stocks, maybe you can hold longer. It's for longer term because you know that this company will grow. So as you hold it, it will grow. Okay. However, if let's say this particular company is not making money, you know that people invest is because of the demand and supply. Okay, because there's some speculative play behind the scene. So you just want to ride together with the uptrend. By all means, you can do that, but make sure you have a cut loss strategy. Okay, you must have a cut loss strategy. Otherwise, you get burned. Okay, because once it drop, it will drop badly. Okay, so this is trading, and the difference between trading and investment is different. So you have to be very, very careful. So the first one is called ITA resource per heart. So this ITA resource per heart, let's see the chart now. Okay, as I go through, right, each of these stock, I will present the chart first. I let you see the price first, okay? Then only look at the fundamental. Okay, so you know how this price behave over the last 2 years. Okay, I show you 2 years, 2 to 3 years only. Okay, I'm using the chart Nexus, and the chart Nexus is free charting software for 3 years of data. So if you were to read 2020 current year, you can read up to 2017. Okay, you can read up to 2017 data. So at least you can see 3 years of data for free. And if let's say you want more years, you can go to investing.com or TradingView. Okay, this investing.com or TradingView, they also have free charts for the Malaysia charts. Okay, you see, I have here today, every day is green on my slides, on my backdrop, on my dress. Everything is green because today is we're talking about green technology. So you see this green square here. Okay, the green square here. Okay, the reason why I highlight this part to you is because this is an important technical breakout that I want to highlight to you. So when you look at the chart, okay, when you look at the chart, you can you can lay down the basic things first. You can lay down the 20-day moving average and the 200-day moving average. So you can see over here, I have my moving average 20-day and my also 200-day moving average. So the 20-day moving average refers to the short term. Okay, so I want to see what is the trend for the short-term trend. And I wanted to see the the long-term trend as well for the 200-day moving average, which is the green line. So currently, if you can see, this particular stock is above both the red lines and the green lines. So that means it is both short-term and long-term bullish. Okay, so it means what? It means that currently this particular stock is on an uptrend. Is it clear? Okay, I make it very simple so that everybody can understand technical analysis. So on the chart, you can download the software. Okay, you can download the chart nexus, or you can go to the trading view, and then you can key in. You can Google EITA charts, and then they will bring you to the trading view or the investing.com chart, and then you can see the chart. So then you pull out two lines, and the moving average line is called the 20-day and the 200-day. Over here at the bottom here, I also pull out another indicator, technical indicator. Is called the GMMA. Okay, this technical indicator is also using the moving average line, and these are all the different lines of moving averages. So in fact, for technical analysis, I don't use a lot of indicator. I don't use so much of a stochastic, RSI, Ichimoku, MACD, all the fancy terms. I don't use so many. I use very simple technical indicators. And the most indicators that I use is the moving average lines, okay, because they are very simple and also quite reliable, okay, and it tells you the trend. After all, I just want to know the trend, okay. Now, over here, I highlight this green square box here is because did you see that there's a huge gap up over here, okay, a gap up meaning that there's a space between each of these bar chart, and this is a candlestick chart pattern, or these are candlesticks, all these one bar, all these are candlestick. It's a technical chart for chart reading, okay. So and then you can see from this bar to this bar, there's a big jump, and there's a empty space in between. So this is what we call a gap up. GAP-UP, gap up. So it's like a leap, okay, you jump up. So when you see that the price jump up, is it good or bad? Okay, common sense will tell you that, oh, the price has jumped up. It is something good, something favorable. So over here, we saw this big jump over here, and this jump is not like 1 cent, 2 cent kind of a jump. It's like 20, about 10-20% kind of a jump, because from 130 to 150, 20 cent jump. It's a big jump, okay? So this is a big jump. So it's very significant. And you see the volume is also rising over here. A big rise, a jump, a spike in the volume. This is what we call a spike in the volume. So a big gap up followed by a spike. So that means what? That means this gap over here, okay, from 130 to 160, this gap over here, 30 cents gap, this gap, most likely in the near future, right, it will not come down to this level anymore. Okay, for the next few months, it will not come down to this level. So that means most likely this price, ETA, will be rising at above 160. It will be consolidation, it will come down, retrace, and then it will go up again, and then it will come down, and then it will go up, but it will not go down below 160. Okay, so if you happen to bought this stock at around 130 to 160, this level, right? So you are quite safe, and then you can afford not to look at this chart for maybe 1 or 2 months. I cannot guarantee more than 2 months now, because all this gap, it could be not more than 2 months. So anything can change also. So nothing is 100% for technical analysis. Nothing is 100% for investment. So you still need to look into your chart regularly, okay, to see if there's any major significant change. So one day, if let's say the chart get weaker and weaker, that means it will go horizontal, not only going horizontal, but a bit of a downtrend. That you will have to be careful. Okay, once it is on a downtrend, right? Even before it hit that 160 level, I think if you are on a short-term basis, you have to sell it. Okay, so that is the trend. Okay, because you are buying on the short term, you want to ride on the short-term trend. You as long as it's above the trend line, you will hold it. Okay, once it's below that trend line, right, then you have to sell it. Okay. Okay, so looking at it, this chart, ETA is in a bullish state. Okay, the technically is very strong. It has actually gone up 100% from the bottom in March until recently. Okay, it's about 100% gain. Okay, then let's see. What does this company do? Okay, they do solar panel. Okay, so all these are the products that they are producing, manufacture. They manufacture these products. So they are involved in the manufacturing and of these products. Not only in this green product, and also they also involved in electronic components and equipment, and also some construction work and maintenance of elevator system, okay, and cabling system and all this. So this solar energy is part of their business activity. Okay, it's just part of it. And this is a fundamental. Now for fundamental, I will pay attention to, because there are so many fundamental ratio. So I will pay attention to these fundamental ratios, okay? Particular attention to these fundamental ratio. Number one, I want to know what is the market capitalization. That means how large is the company. The reason why I need to know the market cap is because fund manager, they usually will not buy into those companies with too small the market cap. Okay, what is too small? I would say anything below about 800 million it will not, the fund manager will not be looking at them too much. Okay, they probably will prefer to invest in those that are above 1B, market cap of 1B, or at least 800 million. So for me, I like to invest in what? I like to invest in those good potential stocks, and their market cap is around 7 or 800 million, because 800 million to get to 1B is quite fast. Okay, so those potential one, if you position yourself for those with the 800 million kind of a stock first, and then once it hit that near to 900 million 1B, right, the fund manager will come in to buy up and the price will go up. Okay, so I usually will look for those around 800 million kind of a market cap and then position myself first. Okay, so if let's say you identify that one is your good fundamental stock and then you want to keep it, okay, you can do that. So market cap is very important. Then number two, what do I look? Okay, I look at the profit margin over here. How profitable this company is. The net profit margin, how profitable. There are a lot of business, a lot of industries. In Bursa, Malaysia, we have more than 1,000 stocks or 1,000 counters and 1,000 companies with different industries. And among the sectors, we have 12 or 13 sectors. Okay, Bursa Malaysia classified under 13 sectors. You have the financial, you have the construction, you have the healthcare, you have the technology, you have the plantation, you have utilities, logistics, 12. You have 12 or 13 of them. And each of these different industries, they all have different average of profit margin. So for example, the banking industry. The banking industry, the norm is about 15 to 25% of profit margin. Okay, that's their norm. They can get that kind of a profit margin. So if you see a banking stock with 5%, 6% kind of a profit margin, you know this bank is below the peer. It's like it is outcast. Okay, it's not a good banking stock. Okay, you look at that profit margin, then you know which company is full of potential. Because each company, we analyze the stocks as in industry by industry, sectors by sectors, and then you compare within that sectors. All these numbers are actually you need to compare within the sectors. Then you look into another industry. Let's say you are looking at a plantation. Okay, for plantation, what is the average norm of their profit margin? It's actually 1 digit, less than 10%. Okay, so if that particular plantation stock has a double digit kind of a profit margin, then that one is a leader in the industry. Okay, it may not be high, it may be like 15% of a profit margin, but among the peers, among the industry, 15% profit margin is the highest already. So he's the number one in that industry. But if let's say you are looking at the consumer, okay, consumer product, if let's say you are looking at the stable food, okay, maybe the profit margin is higher. Okay, so technology profit margin can be high, can be low, depends on which business, which part of the technological sectors that you are involved in. If you are in a hardware, semiconductor hardware chip making, the profit margin may not be good. Okay, because you are looking at the hardware. So hardware can be easily imitated, can be easily copied. And another company can easily produce the same product that your company is producing, because not much of a technological know-how in that product itself. However, if let's say your company, it's a technological company, but it's involved in the engineering side, that means you custom make your product for your customer, and that involves some consultation. For example, the Vitrox. Vitrox is a technology company. They do very custom-made kind of a robots or machine for the factories. So their client all over the world, and then they custom-made the product for their customers. So this kind of a custom-made product, right? Do you think they can charge more? Yes, they can charge more. So the profit margin is much higher. So one project, they can say that, okay, I make this for you. I can help your factory to save millions and millions of ringgit, millions and millions of dollars. And I can charge you 1 million, okay, for this machine. Would you want to pay? Yes, of course you want to pay, because it's for long term. Okay, so they can charge high price for Vitrox. But for VS and then G-Tronic, all this like mass production, produce, and then not much of a technical know-how, this margin is not good. So you must understand the business itself. Huh? Okay, so for this, the profit margin is about 6%. Okay, 6% in this industry is no good. Okay, so the fundamental here, profit margin is not very appetizing to me. I mean, as if I'm the investor, I wouldn't want to see this kind of a figure. And then the market cap is too small. Okay, and it's below 20, so it's okay. The ROE 9% is average. Okay, it's not fantastic, but it's average. Okay, let's see what is good. I will highlight in yellow. Okay, so what I like about it is the dividend yield, 3%. Okay, because we now, what is our FD rate? Our FD rate is 1.5%. Now this one is 3%. At least for investors, we compare to the FD rate. So rather than putting the money in the bank, I can invest in this stock and then I can get 3%. Okay, so that's how the investor's mentality is by looking at the dividend yield. Then another good thing about this company is that its debt to equity ratio is very low. That means it's about 16% of the equity is in debt. Okay, so that means the debt is quite low. If let's say you have a debt to equity ratio is 1:1, that means 100% let's say you have 100 million of equity, you will equivalent to 100 million of debt. Your debt, the amount of your debt is equal to your equity. Okay, so that is no good. Okay, you can't have too much debt. And investors in Malaysia, right, is very funny. They look at this debt to equity. In US, maybe they don't look at the debt. They don't bother about the debt. Okay, they only bother about the P ratio for the or other things. Okay, but in Malaysia, it's very funny. We look into the debt equity. Okay, and then we look at the cash, how much cash pile you have, and then we look at the dividend yield. Okay, so these are the behaviors of Malaysian investors. Okay, we look at, we like to see a company we give us a good dividend, and then we like to see a company that do not have much debt. Although now the interest rate is very low, even if you have tons of debt, it's still okay to me, I think, because the interest rate is really low. So the cost of borrowing is low. It's much better than last time. Last time, if you were to ask me, when the cost of borrowing was like 8-7% because of the maybe the interest rate was very high, about 5%, 4%, borrowing rate become like 6-7%. That high of an interest, of course, you have too much debt is no good. But now we are in a low rate environment. Okay, even if you have huge debt, right? If your company is still making money, you can cover your debt. Why not? You borrow and then you can invest and then you can make more money. But I'm just looking at, because investing, you don't look at your own, okay? You look at the whole situation. You look at what the investors are behaving, how the investors are behaving, and then you have to adapt to the environment, okay? So that's why investing is not too easy, but actually it's not too difficult also, okay? You need to understand the psychology of investing. So we understand that Malaysian, they do not like to see debt. We like to see dividend yield. Okay, so these are the two things. And then we also like to see the profit margin. Okay. All right. So for this particular stock, basically it's earning money. Okay, you can see their quarterly result is positive, and then the trend is although it's not like an uptrend like that, because you know this year is a COVID year. Of course, we have some dip over here. This is 2020, and then this is 2019. 2019 supposed to be is higher than the 2020. Like, unless you are so good that your 2020 is higher than your 2019, then because this year is actually a recession year. Okay, so we understand that the earnings may not be as good as last year. Okay. So then the annual income revenue is actually rising, okay, which means that this business is growing, which is positive for this, okay. And the dividend yield is also growing, okay. They are giving more dividends in cents, which is good. So overall, this company, in terms of the fundamental, is good in terms of the dividend yield and low debt. But the market cap is too small to invest. So this kind of stock, to me, I would think is for short term, okay? Unless yeah, just simply looking at the market cap, right? I would not invest for long term, because in order to reach 1B, it will take a long time. Okay, so I wouldn't invest for long term. I would invest for short term for this kind of a stock. Okay, so you see how my rationale is. I look at the chart, I look at the fundamental, I look at the market cap, and then I come to a conclusion whether I want to invest in for short term or for long term. And if it's for short term, then I will look at the technical. Okay, when to buy and when to sell. Okay, so these are the process of thinking when you do investing. Side part. For this, why my eyes go up like that? Because this company is very interesting. Okay, I find that in terms of technically, you see, it has it was actually around 180 in 2018, 2019. actually last year. It was 180 and then it went down to around 60 cents. 180 to 60 cents is more than half price. Half price, usually if let's say a stock reduced by half is 180 to 90 cents is half price. So, but actually over here you see 180 to 60 cents. So that's like 70% off. So then this particular stock is really badly beaten. Okay. And then you see that there's another dip over here. So therefore this one become a double bottom. And this is very important trend reversal pattern, chart pattern. You see a double bottom here. Okay. So when you see a double bottom, right, your eyes supposed to be blink because it's good for short-term play. Okay, so and then if you were to draw a line here, okay, let me draw a line. Then you see, wow, bingo. Why bingo? Okay, first over here, it breaks through the downtrend line, the green line, downtrend line. Then it breaks through the red line, 20-day moving average. Plus, it also breaks through the green line, the 200-day moving average. So it breaks through 3 resistance line together. So that's why I say a bingo. And another bonus, the volume. Did you see the volume also spike up over here? Then this one is fantastic. So that's why you see the within a short period of days, because investors are very fast one, they saw it, they will grab it. And then immediately you can see the price action jump like this. Okay, it went up to from 90 cents to 150 in a very short period of time, in 2 weeks time, from 90 cents to 150. Then it down to 128 recently. Okay, last week it went down to 128. So for this particular stock, I had a short-term trading. I had a short-term trade. So because I measure the Fibonacci retracement, okay, so for those of you who do not know what is a Fibonacci retracement, I would recommend you to go to my YouTube channel. I have a lot of those Bursa Malaysia webinar. I did one webinar for them, which is on Fibonacci, and also on I have candlesticks, I have chart pattern, I have many. So you go to my Pauline Young channel, and then you can watch all those recorded webinars to talk about the technical analysis. Okay, and remember to subscribe my YouTube channel. Okay, then okay, you see, I entered into this stock last week, okay, before the Christmas, because I saw that it has a 1/3 of retracement. If you don't know what is Fibonacci, but at least you see that this price, right, it went up to, because it went too fast, too quick in a short period of time, so it bounds to fall down, okay, it bounds to retrace. So when it retraces, right, you calculate how many percent it retraces. So from 150 to 120 something is about 30% of retracement. So in any uptrend, right? So the 30% is the limit. So if it retraces by 30%, right, it most likely it will rebound from that 30%, most likely, if it's a healthy uptrend. So true enough, the next day it bounced back. Okay, on the Christmas Eve, it bounced back. So today it also continued to go up. So I had a short-term trade. But in fact, this one, I will go for long term also, because if you to see the fundamental later, right, this stock is actually can worth holding for a longer term. Okay, so technically it is healthy. Let's see the fundamental over here. Okay, so technically this is healthy. I did a short-term trade, and today I exited the market. But doesn't mean that you have to exit. I mean, I'm still waiting for another opportunity to go in again, because this particular stock to me is quite promising lah. Okay, but it's not a buy call, just my personal view. Okay, no guarantee. I have to disclaim first. Okay. So the project is that they have a lot of solar energy because the Woodside Park is like really solar. Okay, you just listen to the name, you know that it's 100% solar. So they do have biogas as well. That means they produce using the waste material and then they generate and then produce into biogas. So they have biogas and solar. So all these are all renewable. Okay. Then they also do consultation and things like that. So they do green tech and renewable energy, which is engaged in the renewable energy business. So just this line alone, the fund manager will love it. Okay. So if let's say the market cap is also about 1B or close to 1B, I'm sure this stock is full of potential. Okay, but the market cap is still not even 700 M now. It's about 622 million. Okay, and the number of share. Now, why I want to show the share is because I want you to do some calculation. So if let's say you see the price is 2 ringgit, okay? So if you let's say the price is 2 ringgit and then multiply this 486, 358,553, then it will be around 972 million. So then you have to ask yourself, is this stock, can this stock go to 2 ringgit? Okay, if it's 2 ringgit, what will be the P ratio? You use 2 ringgit divided by 18 cents. Because just 2 ringgit, your market cap is close to 1B already. Okay, then you use 2 ringgit, 1 PE ratio, right? So it's 2 ringgit divided by 0.18. So if it's 2 ringgit, right, the PE ratio is about 11 PE. Okay, so still full of potential, but no guarantees. Okay, no guarantee. I just say that it's full of potential. There's probability. Okay, there's a probability. And okay, what I like about this is that the P ratio is still low. The profit margin is 27%. In this industry, if you can find a 20% of a profit margin is rather good. Okay, it's quite good. Okay, 27% of profit margin. And this is net profit margin, so it's quite good. And then let's see. Another good thing about it, the net tangible asset is 175, and now it's trading at 138. Today is the 138. So you can see that it is actually very near the net tangible asset, below the net tangible asset. So it's trading at below the net tangible asset, the book value. But one negative thing about this fundamental is it has a huge debt over here. 300%. The debt to equity is 3 times of the equity. So this is what the negative part. So that's why the price didn't go up too much, because as I told you, Malaysian, they like to see what? They like to see zero debt. They like to see as little debt as possible. So therefore, this particular stock, they didn't really attract the attention of the investors because of the huge debt ratio. So you can see how I weigh them, okay, the pros and cons. Everything, you don't see like 100% kind of thing. It's like you have this good, but then you also have that negative point. You have positive and then you have negative point. So in investing, right, you need to weigh the positive and the negative, and then you need to have some numbers and a probability all inside your brain. Okay, you have to think, is it good? Is it the probability of going up is higher than going down? You have all this, you have to analyze in your brain. Then you can come up with a decision whether you want to go for short term or you want to go for long term. Okay, the another one is solar vest. Solar vest in terms of technical is very good. You can see that it is a healthy retracement. It went up and then it retraced back. But this one is also an IPO. It's a new company. So it went retraced a little bit, and now it's technical is bullish. Okay. So this company is mostly dealing with rooftop. Like if let's say you want to install one, you can go to this company on your residential area. They also do commercial and industry. Okay, so this is their core business activity. 100% is solar energy. So it's very green tech company. So this is another 100% green tech company. And the market cap is also very healthy, about 800 million. So that's good. Okay, so that's what I like about this company, 800. And the only thing is the net tangible asset is too small, 22 cents. Okay, so that's the negative part. But in terms of the earnings, let's see. In fact, we see that not bad, the earnings. Okay, the earnings not bad actually, and really going up. Okay, so fundamentally wise, although we do not have much record because it's an IPO, but this company is good in fundamental and technical. Okay, so this company, you can hold for longer term as the side part also, short term and long term. Okay, because I like the business model as well. Okay, the other one is K Power. This one I added today because I saw the price actually went up a lot and wanted to say something about the price action. And in fact, today, right, it has a drop of 6% drop price. So this particular stock, as you can see right at the end there, is too sharp. I mean, too fast and too rise too fast. So these are the stock that I wouldn't want to touch on it, okay, because it's too risky. It's a engineering service relating to sustainable energy and utilities. The ROE is good, which is 17. The profit margin is also quite okay, 14%. And the debt equity is very low, it's almost zero as well. So that's why the price has gone up, because I told you Malaysian, they like to look at those zero debt kind of a company. They say they saw, oh, zero debt, very good fundamental, then they will, you know, go after it. But in fact, the price action telling me that it's not good for short term and it's not good for long term also. Okay, if you want to go for long term, you have to wait for retracement. And if you were to look at the history of the price, it was actually 40 cents, you know, this beginning like during the March, and now it's 7 ringgit. So it's like so many times already. Okay, so this K Power, I wouldn't go for short term and I wouldn't go for long term either at this price level. Okay, despite the fundamental is showing like this uptrend. Okay, because the price action is too scary, too fast. Okay, the next one is MSCB. MSCB, I have to warn you, MSCB, you see there's a head and shoulder here, either a double top or head and shoulder, and it's crossing below it. Okay, so, and this is crossing below also. So most likely in the next few days, you'll see probably that there's a lot of selling pressure over here for MSCB. Okay, so this one, short term, don't touch it. And but one thing about MSCB is a high profit margin is 41%. The highest that I have seen among all these 12 stocks over here is the highest, 41%. Okay, so that's really very high. And the debt to equity is also low debt. Okay, so that's why the price jumps so much. But anyway, you wait for it to reduce. Okay, most likely it will come down to around maybe 560 or 580. Most likely it probably may go down to below 6. And if you want to accumulate, you may buy during that time. Okay, but now don't buy yet because it just come down, break down. Okay, so the another one is Great Tech. Great Tech is actually very bullish. You see, very bullish over here, very bullish breakout. And let's see the fundamental. The fundamental is very huge. Cap stock 5.7B. Profit margin is very huge, 31%. And debt is very low, almost zero. So this company is good company in terms of fundamental is very good. But in terms of the price action, it is actually on the way up. So usually for this kind of a stock, right, you can go for both short term and long term, because once, if let's say you go for short term, okay, and it didn't turn out the way you want, then you might as well just turn the short term into long term, because since that it is fundamentally good, sooner or later it will go up again. So that's why for those some of the short-term play, I like to buy those fundamentally good stocks as well, because my intention is that once it go below the price, right, I wouldn't want to cut loss. If I don't want to cut loss, at least I want to hold it for its good value. Okay, so that's my rationale.
In scanning the QR code. On behalf of BICUUM, I would like to say thank you again to our humble speaker, Ms. Pauline Yong, for your informative and interesting sharing, and to all participants for the active participation. I hope everyone, including me, has gained valuable insight about green technology stock. With that, this concluded our webinar. Thank you all for attending.